Good morning and welcome to the RAI International presentation of our interim results. And on the line today, there's myself, obviously, Lars CFO, and Andrew Bolton. We're going to touch on the results, the numbers, and our operational focus and strategic execution. We also have a slide on Mozambique, just to give you an update on the situation as it unfolds in Mozambique since the last time we spoke. Our headlines: revenue of 26.2 and the underlying EBITDA of 5 is in line with market expectations and internal expectations. Stable financial performance this half of the year. COVID is definitely still a factor in the areas that we operate in because still issues getting to site. The level of bid activity and commencement of construction projects indicates potential near-term improvement on the operating environment. Our business transformation has been underpinned by winning larger contracts, such as the one yesterday with Diego Garcia, with more IFM work, which is very positive, and also increasing our geographies outside of Africa. The order book was reset at 30th of June 2021 to 129 million. We removed the Mozambique numbers as we felt that was a prudent decision to make. The business activity has remained very encouraging, and we're securing some large landmark contracts, which are not currently included in our order book, but which we will hope to announce before the year end. I'll hand over to Andrew Bolton to go into our financial performance.
Hello and good morning, everyone. So this slide just illustrates the top line financial numbers for the first half of the year. As Soraya touched upon, revenue, underlying EBITDA margin are all in line with our expectations for the first half, while we still are impacted from COVID-19 operating environment. Cash from operating activities was negative 3.6 million. That was primarily driven by a reallocation of fixed assets to inventory, which I'll touch on in a couple of slides. Cash at the end of the period was 10.1 million. It still provides us with adequate liquidity to execute and bid for large projects. And we paid out a dividend of 1.35 pence. In aggregate, that was about $3.2 million in July of this year. This slide touches on our revenue by service channel in the first half of the year and compares that with the last two 6-month periods. As you can see, integrated facilities management revenue continued to be resilient period on period. We also won 2 important IFM contracts in the first half of this year, one being with USAID towards the end of the first half, upwards of $21 million, and second one in ABA with the United Nations. Outside of integrated facilities management, you can see the trends in construction and supply chain period on period, with the decrease coming as a result of new contracts unable to start due to COVID. We're seeing that from a construction perspective starting to reverse in the later half of the first half of the year and leading into July and August as well. We won 2 smaller contracts with the United Nations, totaling around $6 million late in the first half. And then we also won and have subsequently mobilized for a 4 million plus contract in South Sudan. Now, this is very good momentum. I think as we've communicated to investors in March and even previous to that, the largest impact COVID-19 has had on us is our inability to commence construction projects, and the inability of our clients to actually place those awards due to the fact that there is no access to site. So while insignificant in each of their own right, combined, and the fact that there's 3 construction projects which have been awarded and have actually been able to mobilize, is quite an encouraging sign for us. So this slide just speaks to our cash position at the end of the first half, and primarily illustrates the changes in working capital, which have driven the decrease in cash. So I touched upon before the fact that over half or around half of the changes in working capital are due to reallocation of fixed assets to inventory. So in March, once the attack happened in Cabo Delgado, and we realized that the project was going to be under suspension, we stopped the transit of goods which were outside of Mozambique, going to Mozambique, and have actually placed those in inventory in various storage locations to be reallocated to other projects. Luckily for us, 95% of the goods that we use to build a camp in one location can easily be used in a second location. And we have projects ongoing and also projects which should hopefully soon be awarded to us, where we would be able to use much of these assets. So the Donna Kelly contract would be an example of that. In addition to the inventory reallocation, there was also some slow payments from the United Nations, which started to clear in August of this year. I think the other point to make on this slide is the capital expenditure. Originally, we'd forecasted $7 to $10 million of CapEx in 2021. That was primarily going to be for the development of the Mozambique property. Obviously, with $4 million being reallocated to inventory, that number is much lighter in the first half of the year, only being 3.3. We now expect total CapEx for the year to be somewhere around $5 to $7 million. Next slide, please. So this slide touches on what Soraya was speaking to in terms of the reset of the order book. We thought it prudent to remove the Mozambique contract at this time. Although it is still active, the operational realities on the ground and the fact that there has been a force majeure called by Total mean that we can't execute the contract at present. We did, however, win $29 million of contracts in the first half of the year. And as we've indicated in the half-year release, we're very confident that we'll exceed that number in the second half, leading to a replacement of the $69 million decrease. I'll hand it over to Lars to discuss Mozambique.
Thank you. So on Mozambique, it is still very much an ongoing military operation, and we are cautiously optimistic that this will be resolved soon. I'm sure you're tracking this in the news, that there has been a retake of the Mocimboa de Praia port in Cabo Delgado, which is a significant achievement, and that the Rwanda Defense Forces, together with the Mozambique Defense Forces, are slowly pushing the insurgents back. We are obviously not in a position to give a timeline, but we recognize the significance of the project, both for RAI International as it is for the international community, and the project, and that several parties are actively involved in securing the area so that the project can restart. On our side, we are working on redeployment plans, and we are ensuring that we are ready to go when it is operationally feasible to do so. Starting immediately after we had evacuated our staff, we provided trauma and medical support to our staff, making sure that all came out okay after the incident. And also through our extensive network in Cabo Delgado, we looked at main issues that needed support and recognized that the large inflow of internally displaced people into particularly Pemba area needed support. So we quickly organized food donations, working together with recognized local NGOs to provide this support. We're also managed to redeploy a significant number of our Palma staff onto new projects. Andrew, would you want to take over and continue on the financial impacts?
Sure, Lars. So as I was saying previously, upon the time of the attack, we halted all further imports of materials and equipment to the country and placed those in safe storage locations for reallocation to other projects. Currently on the ground in Palma, there's $16.7 million of infrastructure, buildings, and equipment. What we're looking at doing now to further safeguard those assets is to evacuate some of the high-value pieces of infrastructure and equipment, primarily yellow goods and trucks. The total is about $2 million that we're looking to move to Pemba for servicing and safeguarding. That would leave us with under 15 million of assets sitting in Palma. Another thing that we're looking to do is we're also liaising with our insurance companies to be reimbursed both for damage and theft of assets to date, which total around $800,000, and there was an impairment charge booked in the half-year accounts to reflect that, and also for the incremental costs we're incurring for storage and transportation.
So on the strategic execution, if we go to the next slide, please. So our growth strategy is continuing to be a winning formula where we unlock value through this long-term approach of being the kind of go-to company for projects that require the extra on-the-ground knowledge or that capability to execute on difficult missions. We're effectively building trust by working on solutions for our commercial clients, just the same way we did and we still are for our clients in the humanitarian and government industries. In addition to that, we obviously add value through our efforts on focus on ESG. And we see this across the industries we operate. We were encouraged to see that the UK MOD published a paper on their focus on sustainability, and they have also reached out to us to work on some conceptual ideas and actually some projects within Mogadishu as well. But what we recognize as well is perhaps the commercial sector is more tuned into these needs, and we do see particularly how our ESG approach is really starting to open up doors in this market. Together with the past performance we are now starting to build momentum in the extractive industry and within the commercial sector, and we believe we have a strong case going forward. So when I say past performance, I'm referring to the track record we have as a subcontractor, so partly to Total and also to ExxonMobil, where we just completed a contract in Guyana, and as well as the announcements around our work with Danakali on the Kululi mine in Eritrea. The contract discussions have been concluded, and we will announce the commercial terms once all approvals have been given. But we are, very happy to tell you that the contractual terms have gone from an original 2-year project to a much longer IFM project. This contract, is worth noting as well, is not in the order book until it's fully signed. So, on the back of that, it's worth also noting that we are in advanced stage negotiations on a similar size project like Danakali in a different geography as well. So, with all this, we are confident of our abilities. And we will announce these contracts as the final approvals are obtained. But suffice to say that the momentum in the commercial sector is really encouraging, as we are gaining a strong reputation for delivery, topped with our focus on ESG. So really ticking all the boxes in this field. So as Soraya touched upon, there was an RNS yesterday about the contract award in a joint venture with ECC for support to the US Navy on Diego Garcia. It's a US $249 million IDIQ, where we will be bidding for task orders against 4 other awardees. We scored very, very high on the construction side particularly, and we're quite encouraged by that. So we do think we will get some inroads into this one as well, and hopefully win some task orders. And we have this year also picked up 2 more contracts with Cherokee Nation, one in the Middle East and one in Southeast Asia, and that's also support to the US State Department. Over the next period, we will be announcing key terms of these contracts as well. So this, what we now call a long-term relationship with Cherokee Nation, shows how we have been able to strengthen our position with our US clients, providing exceptional opportunities for future growth. Having said that, it's not only through partnerships that we successfully grow our business. In Q2, we announced like Andrew touched upon, the USD $21.5 million contract with USAID, where we are the direct contractor on a US contract in East Africa. We're providing IFM services to both the USAID and also the US Embassy that is cohabiting in the same location. This obviously gives us phenomenal past performance in executing contracts for direct to US clients as well, and will set us up nicely for future potential growth as well. We are also, since a few years, as you are aware, directly contracted by the UK government, UK MOD, and are also bidding on their global project as a prime at the moment. Now, it's not always about the commercial sector either. We do push a lot about that because we've been working hard to get into that market. So a lot of these larger scale contracts and large value contracts that we're talking about, many of them are in the commercial sector, but there are also a lot of those going on in the humanitarian and also in the government sector that we are pursuing. So we continue to remain active with the UN and other humanitarian agencies, and are pleased to see that these activities have actually started to gaining momentum as well. Like Andrew touched upon, there's 2 construction awards for MINUSCA in Central African Republic, and we also picked up the FM contracts, both the UN in Abyei, in UNISFA, and also in UNMISS in South Sudan during the first half year. So again, what we see in these strategic slides here is that we are delivering on what we set out as a strategy when we listed in 2018, and that this work is really paying off.
Just to recap on what Lars has said, the growth is still customer-led. We have got a better balance across the markets of governmental support, UN support, and the commercial sector. Exciting news ahead for us with signing the contract with Danakali and the other mining entity that we are in discussions with for a similar camp as Danakali's camp. And we are extremely optimistic that the changes that we've set in place way back when we came to market, is actually paying off and working out for the longer term contracts and the actual steady revenue from those longer term contracts. We don't see much change in the way we execute the projects, but we do see change in the way the clients are taking on board the ESG that we offer, because it's actually now the added value that they're seeking for these projects to have a contractor that actually has the ESG embedded within their operating environment. We've been doing this for a while, and they're now picking up that this is actually an added value. I'll hand over to Andrew for any last words on these slides.
So I was just going to comment that I think the IFM contract with USAID is something we obviously put out a contract announcement about, but didn't necessarily go into a lot of detail on in terms of the strategic importance. It's our first significant contract with USAID, obviously a prime contract to provide IFM services with the US government as well. But because this is a cohabitated embassy facility, this will also provide us with past performance to bid on more IFM work with the US government going forward. So historically, and in the recent past, through strategic tie-ups with Cherokee, with ECC, with other large US government contractors such as AECOM, we've been working on many US government projects on the construction side of things. But following our success with the United Nations and with other customers, where we initially enter performing supply chain services and construction services, and then eventually get to the higher margin, longer term contract IFM services, this is progressing on the US government side as well. And I'll hand back to Lars for ESG.
So operating responsibly and sustainably has always been at the heart of RAI International. In 2018, we turned these principles into a formal sustainability strategy and began setting really ambitious targets. Our strategy is aligned to the UN Sustainable Development Goals and structured around our efforts in environment, social, and governance matters. So as you can see from this slide, our focus areas are skills development and inclusion, in particular including women in our labor force. Those talk to the SDG 4s and SDG 10. We're also providing safe and secure working environments and supporting the growth of local small and medium-sized enterprises. That speaks to SDG 8. And as well as energy efficiency and climate action, contributing to SDGs 7 and 13. So since we formalized our strategy in 2018, we have made substantial progress on these rather ambitious targets that we set ourselves. We began aligning our business with the Paris Agreement and have set our first science-based carbon reduction targets. We've installed a 102 kilowatt solar plant in Mogadishu and continue to incorporate renewable energy into our projects wherever possible. And as I spoke to earlier as well, this is something that it's really finding traction both in the government and also in the commercial sector. We're on good track to reach our gender ratio and local staff skills development targets. And we also continue to carry out community engagement initiatives this year, focused particularly on helping communities in our areas of operation in battling COVID. We've donated a substantial amount of masks to frontline workers and many of them working in rural areas and amongst the IDP communities. Now, all of this contributes to our purpose of delivering immediate results and lasting change, which expresses our long-held belief that a successful RA project is one which has an enduring positive effect on local communities while delivering business results.
In terms of the outlook, as we talked about in March, and we're speaking to more again today, the business development activity has picked up significantly since the end of last year and has only grown month on month going into this year as we have customers looking to execute both the projects that they were unable to do in 2020, but also accelerate their plans for their 2021 projects and start to plan for the 2022 projects. Specifically, this has been, I think, accelerated the most in the commercial sector, followed by government and then the United Nations on top of that. That said, we remain cautious for the outlook in the second half of 2021. Our expectations, at least from a numbers perspective, remains that there's a baseline scenario where essentially we turn over the same figures as we did in the first half of the year, but that accounts for much of the larger contracts coming in later this year than they potentially might. Obviously, if contracts do land earlier than close to the end of the year, there may be the possibility of generating significant revenue and profits from those contracts. But if it does push out to 2022, essentially that profitability will just bridge into the next year. With respect to our order book, so Soraya touched on at the start of this presentation, we have reset it at 129 million, taking out the Mozambique contract. But we've announced 3 contracts which are not in our order book. 2 with Cherokee Nation, where we're getting very close now to finalizing the pricing and hopefully moving forward on those projects. And the Donna Kelly contract, where we're simply waiting for approvals. Soraya, would you like to provide a summary?
Thank you. So to summarize, we are delivering on the strategy. The strategy is paying off because we are getting larger contracts and we're expanding into more geographies. We are delivering for our customers. We see repeat business and growth through the customers into new contracts. And we also see how we can upsell work within the contract to these customers. So it's actually been really exciting to be part of this platform with them. And we anticipate an acceleration in contract order book due to lots and lots of good bidding activity, lots and lots of business development, and the current contracts that we have that are secured but not yet finalized, which are not in the existing order book. Obviously, we reduced and reset the order book, removing Mozambique because that was prudent. We do remain cautious on the outlook of the second half, but we're actually very confident in our long-term value proposition as we are a sustainably growing company. And thank you very much for having us today.
And the first question is regarding yesterday's new contract announcement. Please could you clarify what are the contracted deliverables, ignoring those items on which you may be invited to bid, and the revenue that's firmly contracted?
The scope of services to be provided is quite wide-ranging. Primarily, it's a construction contract, but it's possible that there would also be task orders issued for maintenance and operation work. In connection with what we're guaranteed to win, there's no significant amount of work that would be guaranteed, but there are 5 parties that will now be bidding for any request for proposals that come out under the program over the 5 years. And the indicative value of what can be issued under the contract is $249 million.
Thank you. And leading on from that, can you, for modelling purposes, how would you recommend that we model Diego Garcia's award? Should we, for example, divide the 250 million by 5 and assume that we share a fifth with ECC?
I think that would be the most straightforward way about going about it. I think you could probably apply a level of risk that the entire 249 million won't be allocated to that. When we speak about it internally, we speak about around a $20 million figure over 5 years, but that is simply an estimate.
Thank you. And can you remind us of the potential size and time frame for Donna Kelly?
So recent discussions with Donna Kelly have led, when we finalized commercial terms with Donna Kelly, it led to an increase in the term of the IFM services that would be provided. So it'll be longer than 2 years. Unfortunately, we can't comment on the value at this stage until the contract is approved.
Thank you. With the Diego Garcia contract, how does that work? What could it be worth for RAI International? And is there any more colour on how the US government tends to operate these type of contracts?
These types of contracts give you, the analogy being you have a seat on the table and you are fishing from a small pond. Andrew's fabulous analogy. There are 5 companies in there. Some do bid on all task orders, but not all do. It has been known for one company to take majority of task orders based on how well they are pricing and executing the project. So we anticipate that we're going to do a very good job. We managed to get a seat at this table against companies that have actually been operating in Diego Garcia for quite some time, which shows that we are very technically competent and our pricing is on par. Given that, I think that we are going to be working this hard to ensure that we get as much as we can out of the task orders being issued, and also look at any other opportunities that may present itself in that area.
If I can add to that as well, so I think in the education paperwork that came out and the analysis of the bids, we scored very highly on a number of items that are higher than most of the competitors actually, and some of them, as Soraya pointed out, has already worked in Diego Garcia, and we have not. I think there was also some good marks on our ESG again, but really it's the solutions-driven approach that we have to any contract that really ticks the boxes for a client like U.S. State Department, and in this case, Diego Garcia being very remote and in a very difficult place to operate on. I think what they've noticed with us is our way to drive through solutions when it's needed.
Thank you. And teaming agreements look very interesting. Are margins lower on these types of contracts, given that you're not the prime contractor?
No, I mean, we don't change our margins if we're going to be a prime or a sub. Essentially, our margins are fairly static and depend primarily on our service offering that we're providing. U.S. government contracts come along with a certain level of administration that's necessary, and there's a lot of extras that contractors need to provide when they're performing services for the federal government. What our teaming agreements are based on are that we're teaming with large, in many cases, multi-billion-dollar turnover organizations that are geared to work with the federal government and have done that for years and years. They bring in expertise in terms of how to both manage and administer these projects, and we bring in expertise with reference to how to execute these projects outside of the United States.
I think it's also worth commenting on that some of these teaming agreements are necessary because the U.S. company will have to be a prime on some of these U.S. State Department and U.S. military contracts, both from just a particular business sense that the U.S. government has, but also from a security perspective where they have security clearances that only U.S. entities can have and hold. So we'll execute on the parts that are not needing the security clearance particularly.
Thank you. And Canacor's research is now available on Research Tree, which is helpful. Are you comfortable those forecasts tie back to your outlook comments for this year?
Yes, we're comfortable with them. We spoke about that, or sorry, I mentioned that earlier in the presentation. That the forecast for this year essentially represent baseline turnover, baseline profitability assumptions, assuming that no new significant contracts coming in the near term and we can start to generate significant revenue from those. Obviously, if contract awards are pushed forward from our conservative expectations and we can get on the ground and generating revenue, there's potential uplift. If not, that revenue will be recognized in 2022, consistent with the forecast.
Thank you. And should we be concerned about the lower cash position at the half year? Does it limit bidding activity?
So it doesn't limit bidding activity. Our customers, so generally we will submit our written proposal to them, but we'll also be having conversations with them. So I think in one case it was brought up about obviously the significant decrease from the start of the year to the half year. But once explained in the context of Mozambique and in the context of timing differences on receivables, they understand it, as do other stakeholders. As we mentioned, much of it has to do with the inventory buildup resulting from the reallocation of the Mozambique fixed assets. But with Donna Kelly coming in and with potential other awards in the near future, plus our ongoing contracts, we feel as though that should be able to be unwound in quite a short period of time.
Thank you. And what costs will you incur on Mozambique going forward as it's mothballed?
So on the ground costs relate to primarily safeguarding of assets, and at present there's insignificant costs which we have planned to be spent on the evacuation of high value assets that I spoke about in the presentation. Other than that, we are incurring storage charges in connection with the assets that we had to reallocate that were in transit at the time of the attack. But we're liaising with our insurers for reimbursement on those, as well as the impairment charges that we took at half year, which relate to damaged and stolen inventory and fixed assets.
Thank you. And are you seeing costs increasing with supply chain inflation?
We have seen some cost increases, obviously, particularly in the logistics industry. I mean, the cost of shipping across the oceans at the moment is definitely gone up about 20-25%. We have been very, very good at controlling our costs despite this surge, and are normally managing to build it into the project cost anyway. So not a dramatic change for us there.
Thank you. And is the UN still as important a part of the new business opportunity?
Yes, indeed it is. The UN will always be a very important part of the work that we do. When we came to market, the majority of our client base was different UN agencies. And one of the key things we wanted to do was to diversify, to increase the balance between UN agencies and others who are developed by governmental and commercial. But we still do manage a lot of contracts for the UN, and we do bid on a lot of new contracts upcoming for different agencies. So yes, indeed, it is very much part of our deliverables and a very important client of ours. Well, all the different agencies.
Tremendous. Thank you very much. And that's the end of questions. Soraya, do you have any closing remarks?
Just thanking everybody who's come on board to listen to us this morning, and for obviously some of you have just found out about our international, some have been following us for some time, and I hope you do look at all the other things that we have out there on our website, and specifically our sustainability report, of which we are very, very proud, because it is a key differentiator in companies such as ours who are actually growing in this market, that we have something that we set by a long time ago before it was fashionable, and it is becoming really key with our clients as well. Thank you very much for having us today.